Welcome to the Productivity Podcast. Today, I'm delighted to be joined by Gosia Furmanik from Fenner. Hi, how are you?
I'm very well. How are you doing?
Good. So today's going to be an interesting one because I feel like I'm going to learn a lot today as well. So we're going to be talking about open banking. But before we get into the detail to find out the what and the how and the benefits, do you want to give us a bit of introduction about yourself, how you became the co-founder of Fenner and what Fenner does?
Yeah, of course. Yeah, thank you very much for hosting us here in the podcast. So my name is Gosia, and I started a business called Fena back in 2019, at the end of 2019. And the reason why I joined Fena and why I decided to kind of dedicate my professional life into uh, open banking is we felt that open banking is such a great um, concept when it comes to businesses, mostly because it helps businesses to optimize the cost structure, but also access data to inform the business decision. And it's quite interesting from the retail perspective. And in terms of my a little bit about my background. So my background is primarily in technology, mostly in marketing and products. So before Fena, I was head of marketing for a company called Reala, and Reala was commercial property search engine that got then acquired by a larger US company called Costa. And before that, I worked for an events advertising and technology events company called Cannes Lions. So that's kind of my professional background. And in terms of Fena, we started the journey to mostly help small and medium businesses to compete with the larger enterprises on the technological level, utilizing open banking. And that's kind of what drives us and what our mission is, to bring the open banking technology to more of a smaller businesses, to let them compete with the larger businesses.
Excellent. So a wide journey, lots of tech involved in kind of your previous lives. So for the uneducated, and I'll include myself in that, do you want to tell us in really simple terms what open banking is, just so that we start with everybody on the same level of understanding?
Yeah, definitely. So open banking is a kind of UK interpretation of a wider legislation called PSD2, and that's Payment System Directive 2. And that legislation was introduced in the UK and wider in the EU, mostly because our legislators wanted to bring more competition in terms of payments and financial services in Europe to compete with the US companies, aka Visa and MasterCard, on the payments rail system. So that's one part of it. And B, it's effectively a framework that allows regulated technology businesses to build a connection with banks across UK and Europe to access payments rails on one side, and on the other side to have access to data that is effectively gathered by banks. So the transactional data, the individual bank account holder data and business bank account holder data. And that data can be then made available via an easy interface built by technology businesses to use by both consumer and other businesses effectively.
Got it. So if I play that back to you just to check my understanding, it's a way of de-risking the market in terms of the reliance on Visa and MasterCard. So to enable others with the use of technology to have a standard way of taking payment, making that transaction, and then holding all the records around it. Is that a fair assumption?
I think that's fair assumption, and that's just a part of it, but also ability we gather so much data as well from our transactions on the bank account, and that data can be made available for technology businesses, but other businesses as well through technology to use for things like, for example, loyalty programs or analyzing the transactional data, is onboarding of the businesses as well. So that's one part of it, plus the payment side. So utilizing our great banking system and in the UK, faster payment network to make faster and quick and cheaper payments between businesses and individuals, and both businesses and businesses, to make sure that we can get paid easier and quicker and in more cost-effective way, effectively.
Okay, so you've touched on some of the benefits there. So it can potentially be quicker. You said cheaper as well. How does that work?
Yeah, mostly because it effectively utilizes bank-to-bank transfer. So it cuts off within the normal card processing. It takes about 5 or 6 different parties involved, and each party takes a fee, obviously, of the transaction to make sure that they can provide a service. In that case, you transfer money between one bank account to another bank account and use a third-party provider like Fena to facilitate that transaction. So effectively, you cut a lot of middlemen, and because of having that more simple structure, we can simplify the cost and offer a cheaper transaction versus card transactions.
Because certainly from a retail environment, I suppose for me, there's that annoyance. If you buy something, they take the money straight away, but then if you refund something, it can take, some people quote 7 to 10 days. So should it theoretically speed up some of that process, or is that just their internal process?
No, it's a clearing of the payment, but yes, it can speed up that process, mostly because in our case, we built a reverse bank transfer, so effectively uses the same rails in a faster payment network. So the refund can be literally within seconds. So that's potentially as well a benefit to a consumer.
Yeah. And any other benefits that you're kind of discussing with clients we've not talked about?
Yeah, definitely. It's also fraud prevention, mostly because it doesn't use any kind of card details or any kind of details. It's all using APIs effectively. So, from the consumer perspective, they require strong authentication to authenticate a transaction. And from the retailer perspective, they don't hold any details like card details. It's all being tokenized and it's all using APIs. So there is no way of, for example, leaking the card details data. So that prevents fraud and also helps basically all retailers to make sure that the compliant data is more secure.
And I can still use my credit card or bank card to make the payment. It's just then processed in a different way.
No, it's not. So it's not a bank using your own online banking or mobile banking.
Yeah. So we cut out the card in effect, and we're dealing straight from bank to bank. To bank. Got it. Good. And that whole security thing is clearly a big upside because of GDPR, and we've seen over the news in the last, I don't know now, 4 or 5 years of people leaving laptops on tube trains with personal data in, and clearly there's that suspicion around who's listening to us and which countries might be trying to hack data or influence elections. So that it's a big topic, isn't it, that people rightly so are very concerned from a personal data point of view, but then from a corporate point of view, that whole data governance piece.
Yeah, effectively those transactions have a bank level security because it requires bank level authentication to make a transfer between one bank account to another.
Excellent. And there's a benefit, and you might need to explain this to me, of de-risking our reliance on the American banking system. Is that correct?
Yeah, so it's more or less of a banking system, more of a payment rails. So card payment rails are kind of the main two providers, which is effectively Visa and MasterCard. And there are American companies. And if someone else is in the White House and they decided that they want to, I don't know, impose some sort of restriction on those companies selling abroad, that might affect other countries. So as a response, we need to have an alternative way of getting paid. And so using homegrown rails like Faster Payment Network in the UK or SEPA in Europe, we can kind of make our system more resilient and more kind of reliance on our own infrastructure, local infrastructure, instead of foreign infrastructure.
And again, and I'm sure Visa and MasterCard spend a lot of money and have a lot of security around their processes, but they must be prime targets again for kind of cyber attacks, ransomware, and all those kind of things.
Yeah, that's correct as well. Plus, here, obviously, because we using effectively bank transfer, which banks are probably one of the most regulated entities from the financial services. So they security is top notch, and on this also it requires strong authentication on from the customer perspective. So they need to approve that specific transaction in order to release money from the bank account to the whoever they pay, their business or other individuals.
So I get all the benefits, understand what it is. So we've kind of lost a car. We're dealing directly with bank to bank. There's not really any data that's being moved that if it was leaked, because we're going through the APIs, you could find out personal information, which is great. If somebody says, get all that, sounds brilliant, how do they go around implementing open banking?
I think there are providers like ourselves that make open banking APIs available as off-the-shelf products, or using our SDKs or APIs. We also offer plugins for various, for example, e-commerce services like WooCommerce, Shopify, and similar. So there's a various way of going about it. Either just simple, in our case, it's registration on our portal, and just trying and see if they can generate payment links using our dashboard, or if they want to implement it on the, for example, e-commerce website, and they have a bespoke website they can use, generate API keys and integrate our solution using APIs or SDKs. And if they use, for example, use a Shopify, they can use our application and install it and add open banking payments as one of the options in the checkout.
And from a consumer point of view, that I'm going to go and shop in, I used to work at Boots, so let's use Boots as an example. I go into shopping Boots, I go to the self-checkout. How does the journey change for me then from a normal, get my card out my wallet? What happens then?
So, for example, on the, let's say it's a in-person payment. So what they can do, we can display a QR code on the either a tablet or EPOS, whatever they're using, and a consumer can just scan that QR code, select the bank they want to pay with. So, for example, if they want to pay with their, let's say, NatWest bank account, NatWest mobile banking would open on their mobile and has a basically pre-filled transaction details. So, let's say they're paying £25 to a company called Boots, they just approve it, and they just get redirected to a confirmation page that the payment has been made. And on the screen, we can display then the payment has been made and it's a successful transaction.
This reminds me of a journey. So I think HMRC, so the tax people, I think they use something similar, because I've done this when we've been paying our kind of monthly tax bills. You get a QR code on the screen, you scan it, it opens our HSBC app on my phone. I then do the Face ID to authenticate, confirm the payment. It then, the screen refreshes and it says payment complete, and it sends me an email to say it's done.
Yeah, so HMRC uses actually open banking, and they were one of the first adopters of open banking technology here in the UK on the kind of larger scale.
Got it. So it's good enough for HMRC, I suppose, is the strap line to that, which is quite a strong endorsement.
Yeah, that's correct. Yeah.
Good. So implementing is relatively easy. Have you got any other kind of user case examples or case studies you can share with us, just so people can start to get a feel of how it works?
Yeah, definitely. So I think because a lot of we obviously, it's not like a miracle solution. It's a solution especially good for businesses that actually have a quite high value transaction, because that's where they can see the benefits of open banking straight away on the cost side. So one of the good example is, for example, furniture companies. They often have they take, let's say, orders in store, but the furniture is being delivered, let's say, 2 or 3 or 5 weeks later. And that is a very good example of use case for open banking. So they can generate the order, customer can pay in store by either scanning a QR code, they can get an e-link sent to the email address with the order confirmation. They click on the link, complete the transaction, the payments received straight away by the retailer, and then the order is being basically sent to wherever they need to fulfill their order for the furniture side. And that is actually a very good use case because the transactions tend to be more high value. The saving is significant. It will be about 80% cheaper than card payments. So that is a significant benefit to a retailer, and customer had quite seamless experience on paying for quite high value product.
And that, so high value is good because we're saving proportionally
Loads
on
of money on
the fee.
Yeah,
But
exactly.
there must also be a benefit if you have lots of small transactions just because of the volume.
That's true as well. So lots smaller transactions can be done quite quickly, and it definitely helps with getting money faster on the bank account instead of waiting, I don't know, 5-7 days for the card processor to release the funds. So it helps with the cash flow if there is a high volume of transactions that need to be received quite quickly on a bank account.
Yeah, which can make a massive difference to some
Yeah,
companies because of that. There's always that belief that somewhere in the middle of taking the payment and getting the money, and then the reverse logistics of issuing the refund and the customer getting the money back, somebody in the middle's holding a lot of money.
Yeah, for quite a few days, basically.
Yeah, in an environment where there's high interest rates, you can make a lot of money off holding money for a few days, if that makes sense.
Yeah, that does. Yeah, especially now if you can get 5-6% on the deposits.
Excellent, good. So if we've got people listening to this and they're thinking, okay, that sounds really interesting, and we know that people are looking for cost efficiencies, but I'd class this as a payment efficiency from a speed of getting the money into your business, a speed of getting money back out to customers on refunds, which I think is really important, but also that security, the data protection piece, and the whole cash flow. If people want to get in touch with you and find out more about how Fena could help, where's the best way for them to do that?
I think the best way is to start on our website, which is fena, fena.co. And then there is a contact page that you can contact us via the website. You can also connect with me directly, and my email address is gosia@fena.co. And feel free to connect with me on LinkedIn. It's just my name and surname, so it's Gosia Furmanik on LinkedIn.
Perfect, and we'll put some of those details on the show notes so people can click through and find you on LinkedIn. So it sounds like we're kind of at the cusp of this. We talked about HMRC using it, which is clearly that big endorsement. But it sounds like potentially this could revolutionize some of that cash flow and data security over the next few years, plus also de-risking us from what does and doesn't happen in America, which feels relatively stable, but as we've seen before, their presidents change and we agree or disagree with who they've got in, plus there's various conflicts around the world that they're involved in as well, which we potentially are. But it does seem that Visa, MasterCard have maybe, a monopoly is not the right word, but had a very low level of competition over the years, and this might start to change the game.
Yeah, it helps us to utilize our own homegrown infrastructure, which is great. And it's also what's quite interesting, which I wanted to add, is what's coming for open banking, which are effectively variable recurring payments, which could potentially replace two types of payments: direct debits and card on file.
Mm-hmm.
And that is another exciting development in the kind of world of open banking. So effectively, that's coming very soon. I know there was a consultation by the regulator here, and they're quite keen to start pushing that solution to the effectively real world. So we're looking forward to implementing variable recurring payments for commercial use cases.
Yeah, and it's interesting that card on file you mentioned.
Mm.
I think some banks have a limit of 9 organizations you can have on file, and I think what that means is if you've got a recurring payment with Netflix, Disney Plus, Amazon, whatever, once you reach 9 people, retailers, whatever, you can't then add any more. So you can't then add that card to Apple Wallet because you've already got 9 vendors on file. So again, opens up a wider range of opportunities for people.
Yeah, and a wider range of opportunities plus again reduced cost, because that would be a very competitively priced compared to the card payments, recurring card payments for subscriptions, for instance.
Excellent. Well, I've found this fascinating. When we kind of talked off air about how this episode would work and what we talk about, I found it interesting then, but fascinating to discuss. Something I hadn't realised I'd used until we talked today. So again, learning all the time. But yeah, let's stay connected. Again, if you're listening to the podcast and you find this interesting, we'll put the details in the show notes. So please reach out to Gosia and have a chat, and we'll keep a close eye on how this technology progresses. But finally, kind of thank you for your time. I know you're busy, and appreciate you taking the time out to chat.
Cheers. Thank you very much for having me.
You're welcome.